Good morning, good late morning, certainly to our members, but also folks that may be watching on YouTube. Just remember, you are on delay on YouTube, a good 30, 40 seconds. So we're not showing you this for folks to mimic the trades. We're not showing you this to prove anything. We're not, right? We don't make any claims. Um, we show this occasionally, a free spot view on YouTube, to show you what is possible. Now, I could be doing some scalping. I could be coming in and intervening. I'm not right now. The machine is got control of this, and it's all hands free. Hopefully, no emotion. Don't get caught up on, oh, I'm up 200. Oh, I'm down 200, or any of that. We really don't want to be doing that. And we just want to be trading for a block of time and try to collect these things called dollars for the time being. God knows what they're going to call them a few years from now. By the way, gold and silver is running. Could be the next bubble. If you have any questions on what it is you're seeing, you're welcome to visit the website. You're welcome to give me a call and or an email. And you're also welcome to, good morning, Tina. And you're also welcome to put it into the chat function. This particular strategy is virtually the same strategy that we're running on Kagi, and we've chose to run it on a custom Rinko configuration here today. And doing all right. So we're okay. We're above water, so we'll take it. Now we're these tools that we build, I should just remind everybody, they're not for sale individually. They aren't. They are not. And the reason, there's a very good reason for that, is if we were to sell the individual tool, it is my contention that I've always made with my Susan, that if we were to sell one individual tool, that whoever was to buy that individual tool could infer from that one tool is going to enable them to jump the shark, so to speak, on their trading. Trading is an acquired skill, and it takes time, it takes some practice, takes some risk capital, takes some patience and discipline, but you need to have some experience. Oops, that's my landscaper. I'll be back in a moment so that I don't drown you out with the noise. Got the loudest blower in the neighborhood. I'll be back in a moment. Okay, sorry about that. I'd like to say it's nuclear powered, but I think it'd be a lot quieter if it was nuclear powered, but it is a loud blower. And he gets outside my home office here, and I can't even with headphones, I can't hear. But we basically do this to show you again what is possible when we look at a swing machine. Now, we're not trading swing machine specifically right here in this view. We are trading it otherwise, but and we're always trading swing machine. But take a look at what it's done with the NQ. 121 minutes ago, At 9:16, swing machine went long. And yes, if you had traded a mini contract, you would be up $3,120. You traded a micro, you'd be up 300. Traded 10 minis, which, maybe some people have that, you want to trade responsibly. So it isn't a question of having the money and not having the money, but you want to trade responsibly. And what do I mean by responsibly? It isn't just a question of having the money. It's also having the maturity to know whether or not you have the acquired trading skill, right? Just because you have a driver's license doesn't mean you can drive a Lamborghini. You're always seeing and hearing those stories about somebody buys a Lamborghini, and I just see the one down in Sarasota, brand new $1 million Lamborghini floating down the street. The 3-minute went long at 9:30, and the 5-minute went long at 9:20. Now, this might be a little confusing to the uninitiated. Like, oh, well, then how do I trade that? Do I trade the 1 minute? Do I trade the 3? Do I trade the 5? There's a technique that we like to teach, and there's probably a number of other techniques around this, but that is where the acquired skill and the approach comes into play. And we could have certainly turned on this strategy, probably would have done a lot better waving off the short trades and just take the longs. So we're getting a little bit of late morning, some chop here. It's chewing us up a little bit. And that's just the price of admission sometimes. And but we're going to let the strategy continue to hopefully do its thing. We're still above water, so. So what we're trying to show, though, is, my hand isn't form fitted to the mouse. I'm not grinding on a candle chart trying to interpret a 5-minute candle. Or I got myself a hammer candle, on a 5-minute basis. The moving average, should it be the 2 or the 3? Or should it be the 8 or the 9? Should it be a weighted moving average? Should it be an exponential moving average? We're not doing any of that, right? Trend lines, we're not doing that either. So that's not what we're doing. Right now, I'm just kind of relaxed, and I can get up from the chair. I can go out and talk to my landscaper, which I just was. And I keep an eye on things, make sure that, the machine doesn't get out of sync, that we don't get too out of hand. There are some things that I could do to help it along, but we'll let it play out. If you want us to plug in any particular market, stock, ETF, futures contract on whatever interval, feel free. And I can always plug it in and we can see what Swing Machine would have done or would be doing with it real time. Happy to do that. I want to say thank you. I don't know who Clear Skies is, but he always retweets us. Thank you, Clear Skies. We appreciate the retweets because we do this to create a little awareness. And so we're appreciative of that, the likes and the retweets and sharing us with other sites. If you find yourself asking during the day, who's buying this stuff? who's selling this stuff? Oh, it must be because of this. Oh, it must be because of that. Um, Folks, that is the rational side of your brain. The intraday price action is not rational. There's no rationality to it. It's machines. It's machines. You're competing with a machine. No, not necessarily our machine, but other machines. Our machine, our programs are trying to track money flow on what they're doing. It's got nothing to do with nothing. I know that may sound, but it's absolutely a joke. And quite frankly, you know, wherever you know, the markets are going to be a month from now, 2 months from now, it doesn't get any easier. I can't say definitively where the market's going to be in the next 5 minutes. If I could, we could load in. What I do know is I have a pretty good idea what the program will do, right? So I got to just stay disciplined and give the program a chance to do it. So if I can't do it in the next 5 minutes, what makes you think I can project where the hurricane's going to be in 5 days? How about where the hurricane's going to be in 5 months? I mean, it's ludicrous. Can't do it. And yet, there are millions of people that, will bet their entire IRA, their entire livelihood based on, downtown Josh Brown. He was a week or two late. Oh, we're going to get a rip your face, you guys know. I hear them too. I see them on the internet. I see them, passing the channel. Isn't it funny how they slammed the SEC goes after Kim Kardashian for touting cryptocurrency, yet CNBC gets a total pass. CNBC's been touting cryptocurrency for years. Their biggest sponsor is Grayscale, the ETF. It's farcical. Truly is. They have mad money, fast money, people commenting and making suggestions, recommendations on a live TV during market hours. Very well could be, benefiting from positions, and they get a total pass. Not that, $1 million and $2 million fine for Kim Kardashian's gonna, break the bank. She could flash 1 or 2 Instagrams and pay for it. But it is a joke. If you haven't, heard this, if you remember, and she seems like she's a very nice lady. There's an internet lady. She's kind of like the crypto, I think one of the crypto queens, Natalie Brunell, very pretty young lady. And, always touting crypto and Bitcoin. And she got on that thing. And I think she worked for MSNBC, and she's got this, podcast. And it was about this time last year that she was part of the big, party down in Miami, and they had a big crypto launch of sorts. That was going to be an annual thing. I don't think they're doing it this year. And it was this time last year. When Bitcoin was trading at $80,000 a coin. The non-fungible tokens. You remember that crap? The NFTs. Those NFTs. Remember, they could, they would, Gwyneth Paltrow could put something in a jar and people would pay, $10,000 for it. Seriously. Oh God. And those NFTs were trading, and SPACs. Remember the things called SPACs? The NFTs were trading like billions of transactions a day. I heard the other day that they're down 98%. 98% means what that means is they are illiquid. If you bought some odorous thing from Gwyneth Paltrow and it's in a jar, you better really like it because you're not going to sell it to anybody. Nobody else wants it, probably not even Gwyneth. But so that was where we were last year, this time last year. We had NFTs, SPACs, and then we had the crypto crowd. Oh yeah, the Federal Reserve is printing money, and it's the dollars, the trash is cash is trash, and yada yada yada, and all that bullshit. And I'm thinking, oh God Almighty, kids, right? I mean, welcome to the party, but it's like we've known about this, right? Like since the 2000s, early 2000s, before. I mean, this whole idea of devaluing the dollar. I mean, this goes back, decades, centuries. Stripping the metal off of the coins. The King's Court. The problem with history and even financial history is where the young folks could learn from it. A lot of times, the history, it starts with the day they were born or the day they bought a stock. That's it. That's their history. I mean, there are these things called books. I'm not talking to you guys about it, but you can read up on this stuff. There's a great book, The Madness of Crowds. You ever hear that book? Read it. Madness of Crowds. It's a great book. Little book. It's old as the hills. I think it was written in the 1930s, 1940s. Talks about the bubbles, the South Seas plantation bubble, and the tulip crazy bubble in the Netherlands. And it's the madness of crowds. It's but there's another old book. These what are these internet traders talk about? Read the what is the guy's name? But it was called the Stock Operator. Was it the Stock Operator, or what was his from the 1930s, 1920s, 1930s? I can't even think of the dude's name. And I read it years ago. I guess it was okay. But the story they don't tell you is that this guy, it was the Stock Operator. It'll come to me. And but that guy, sadly, he committed suicide in the cloakroom off Wall Street after the 1930s. You got to be careful. Sometimes this is the problem with buying and selling discretionary based. Let's say I'm going to give you a real world example. In the I think it was it was the first Gulf War. And I was young. I was a baby. Bear with me a minute. I gotta just answer this text. I'm sorry. So what happened was it was George Sr. was going to go in and kick Saddam Hussein out of Kuwait. And I was young and I was new to the markets. And I believed in stories and narratives, and I thought I was smart. And I said, Susie, I think when he does that, we're going to go to war. And I think oil is going to really go up. So I want to get some options long oil. I wasn't even trading futures back then, right? So I had a broker and told him my theory. And so he ended up, he goes, well, let's not get an option. I didn't even know how options were priced. I knew nothing about them, really. I really didn't when I think back on it. And so we got an option, a call option. And he said, let's not do it, Don, on oil, but let's do it on Royal Dutch Petroleum. And I put $5,000 on this option. Now it's going to decay. I'm not even sure I understood that, but it was only like for 30 days. Well, the war, and I should point out too, I had to discuss this with Susan, that I didn't want anyone to think that it was blood money. My thought was at the time, my politics a big difference now, but I thought, if I was in the service, I'd be willing to go fight. I thought it was a just cause, and I thought it was just, and and if I was in the service, I would have done it. And I thought, so, if we're going to do what we're going to do, and if I can profit from it, I'll profit. So, kind of rationalize that away. But I don't know if it's right or wrong, but that was my thinking at the time. I wouldn't do any of this today, but that's what I did. Well, I don't know if you know it or not. I don't remember. You were there, but the war went really well. That was great. We kicked their butt. And oil did run up a little bit. Well, the next day, the oil, that war was over, and it was over before it started. And oil got crushed within days. And the option got crushed. It went from $5,000 to $3,000 to $2,000. It got all the way down to like $500. And I'm like, well, win some, lose some. I'm young. I got time. I can put the money back. That sort of thing, right? And so I understand that. I do. And so the broker says to me, why don't you just cash it out? The likelihood, Don, that this thing's ever going to come back is like slim and none. And Slim just left town. I'm like, nah, leave it alone. Leave it alone. And long story short, for no reasons of why I bought it, for just a fluke, Royal Dutch Petroleum, which isn't even around now, disclosed some news about something they were going to do, and the option started to run. And it got back to 5,000. It only had like maybe 10 days on it. He's like, hey, we can get our money out. I'm like, nah, let it go. Don, it's at 10,000. I think we should take it out. Nah, let it go. And it went on. We ended up closing the thing out a couple of days before it expired for a little over 20 grand. It was a 4-bagger. And I guess the point of it was I did something for a specific reason, and it did crap. I didn't do what it was supposed to do for the reason that I thought it was going to do it. And yet it did pay out for entirely different reasons. And the broker, even at the time, he made a comment to me that actually cost them, because he said to me, I guess I'm going to have you for life. I said, no. I didn't tell him that. I was like, actually, no, I never did another trade with him. My takeaway was afterwards, I said, Susie, it turned out well, but it had nothing to do with, it was one of the things that led to much of what we did. It had nothing to do with nothing. And, and ultimately even the .com crash, crashed, and it had nothing to do with nothing. So I guess the point is that when you buy something or sell something based on a narrative, your trade might come in. It might. And it may not have had anything to do with what you thought. And more dangerous than knowing, at least I knew it had nothing to do, right? What would have been more dangerous is that if the trade had come in and I thought I had been right, and I was, in fact, smart. And that is even more dangerous for you, but when's trading out. So I am dead serious when I do say, and I do say, every day that all you guys and everybody else here in this market is smarter than me, knows much more than me, and I would arm wrestle you for that right. That when it comes to where the market's going to be and where it's going to go and what it's going to do and yada yada, inflation, deflation, that I'll arm wrestle you for the right to say that I am the most ignorant. If I can admit that to myself, which I do, and I remind myself, I say it publicly, then I am prepared to move left or right. I don't have a bias too much, right? And I can let the machinery and I can hopefully set up the program. Now, do I like the fact that we've kind of drawn down here? No, I don't. Am I going to panic over it? No, I'm not. No. Then there are things that I can do. So we'll just kind of, and it's always dicey in the middle of the day because you do get a lot of this chop stuff. So, but in any case, I share that story where so I don't at all. I like history, economic history. I like the macro stories. They're interesting and all of that, and it's a bit of a parlor game, but it absolutely has nothing to do with what Susan and I do day in and day out. Not a thing. Not a blessed thing. And so every day is a new day. Every week is a new week. It is stunning to me. Maybe it's stunning to you. Now, we had some technical indication of what was about to occur, but I was just saying to our members, and they can hear me right now, that I'm a little bit stunned that we've done what we've done here. Somebody will find a story, I can make one up too. But, over the last 2 weeks, right, the NASDAQ, straight down from 11,800 to 12,000, straight down, couldn't catch a bid for nothing. Nothing, not a bid. And in the last 2 days, we're straight up 650 points, actually probably 800 points, straight up. I mean, what the hell is that all about? Apple got a new iPhone, Tesla got a new charging station. I mean, it's buffoonery. It's buffoonery. But these machines, they are programmed. 90% of all the trading is programmed. It is. In these machines, they push one way, they push the other, and they're looking for buyers and sellers, and they'll push. And they do leave little breadcrumbs, little clues. Now, sometimes on a daily basis, we can. So for instance, on Sunday night, we pointed out to our members that the S&P and the markets were showing us what is called a false low, and that the VIX was showing us a false high. And it's a really nice, it's a highly probable, marker. And so we said, that come Monday, this is what we said on Sunday night. And it's on, I'll have to post it. But on Sunday, we said, if the selling continues overnight, we could be in a situation where we crash on Monday, a significant down. But because of the false low, I'm inclined to think that the powers to be, I said between 4 a.m. and 4:15, when the war room of the Treasury room opens up, the money spigots will open up and they will flatten it out. And our machine, swing machine, I was up for it, positioned for it, started at 5:30, 5:15, 5:30. We missed it by like about an hour. There's a reason for that. The Treasury has a war room. These hedge funds get to work around 4 a.m., between 3 and 4. That's when they start. And so a lot of times the move is done, and then, they leave the breadcrumbs, during the day. Okay, so we just took a little one there. Okay. We'll see if we get back on this here. Little sideways action. Could have done some scalping. We very well might, but we'll see if we can break range. Machine is on it. These trades are going in here, so you can see they've had some losing trades, but everything is still pretty tight. Swing machine. It is not trading swing machine. It isn't. We could be, but it isn't. And if we were, we would still, that one would be the big fat trade. If you have any questions, don't hesitate. But I guess the point that we make is that we're using our machinery to track the markets mechanically, robotically. Not every trade is going to be a winning trade. Not every session is going to be, but we're trading proportionately, and we're doing it, it's just mechanized. The only way I can describe it. But if you get this this idea of trading around a story, around a narrative, it's very, very seductive, because it makes sense, right? If I told you a story about why the market is doing what it's doing, it could be very seductive. And Wall Street and Madison Avenue Bank, they take bank on you buying into that crap. And they even want you to buy into the notion that the Federal Reserve is in control. They have about as much control of this as the CDC had control over COVID. We could be down 600 points this afternoon. Okay, so we're experiencing a little bit of a draw. So we'll see if we can get ourselves at least positive. We can't go all day on YouTube. And I can't promise an outcome for the time that we're on YouTube. So we don't. That's why I say we set out. We have our trading sessions, and I have my limits. But we'll let you watch. And if you got any questions, but you cannot trade either discretionary or mechanically or robotically, where your account goes from peak to peak to peak to peak to peak, right? You have to have drawdowns. So we want to have the account not too volatile, right? So there's been some volatility in this account here this morning, and maybe a little bit more than I'm comfortable with, but the market can have all the volatility it wants, but I don't want to have too much volatility in the account. Now, there are some things that we can do, and that we try to do. And, again, Wall Street, Madison Avenue, they play on your fears, right? And to borrow an old phrase from an old politician, they play on your fears. They also play on your greed. And if you have an emotional attachment to money, that can be very hurtful. Can be. It's easy for me to say, but we keep score on a metric beyond the money outcome. We're tracking, performance metrics of the strategy and what we're doing. And if we execute properly and stay disciplined and keep our emotions in check, the money should accrue. Some days will be much bigger, much better than others. Um, but what we also don't want to have is any negative outliers. Positive outliers are fine, but not negative. Now we're taping this, so at noon, which is less than 10 minutes, we're going to have to sign off on YouTube. But we are taping it, and we'll condense down the video. We got about or 2 hours into this, and we'll run this afternoon, and we'll compress it to a minute or two. So if you're following us on YouTube or on Twitter, you'll see the outcome, and we'll compress it to maximize your time. Again, the purpose of the YouTube is not to prove anything. I can't, it is what it is. The market does what it does, but is to show you what is possible. And getting here. And it's one thing, there's a lot of times, people spend a lot of time doing back tests, right? Back tests. There's a little more to it than that. Making the transition from, a back test model to actually trading and trading live is not necessarily that easy. And there are some steps that we think that are important that we share and go into detail during the Q School to help a person transition. Now, one of the decisions when you see something like this running, right? So we're experiencing a drawdown, right? You may see these little run-ups like, well, if I could get in there and I could make that $50 and I could make another 50 and I could make another 50 and I could make another 50. That would be called scalping. And that would be intervening with the machine, the strategy. We can certainly do that. I try my best not to, but if my account gets down to such a level, usually about a point, about $1,000, where causes me a little indigestion, then I may begin to do that. The reason why I don't want to do that is I don't know, you don't know, nobody knows that if you go at it with the idea that you're going to scalp, 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 then you'll never get the decent run. You'll be constantly, just, kind of over trading. So as long as my account is, within an acceptable volatility range, which it is, I'm making a decision based on my experience that I would be better just to sit on my hands, experience and suffer the draw. Don't get too, don't get attached to it, because if and when it does break out one way or the other, the strategy will get on it and more than cover my draw and still have a nice. But that's easy for me to say and do. We've done it plenty of times, just a few. But for the new person, um, that can be very hard. That's what has to be learned and experienced, um, and it just takes time. If you, the other issue is for traders, if you attach meaning to the money, and you'll know if you do. So, for instance, like you get up, so much money, you make $1,000. Ooh, you get a little, ooh, get a little full of yourself. You get a little euphoria comes in. Oh boy, what am I going to do with that money? I'm going to go take a weekend someplace. I don't know. If you're doing that, then that's the greed coming in. And that's bad. That's a really bad thing, because when you're down $1,000, oh, that's bad. Oh, it's like, oh man, I'm bummed out. Oh man. Oh, the world is against me, that sort of thing. Um, that's equally bad. Then you start cycling and you start, you don't have need to have a very clear, clean head. Even in golf, I won't, I need to have, to play my best golf, I need to have what I call a clear head. I can't, now I don't have a boss anymore, but there were times when I did, and if I was at odds with the boss over something and I wanted to go out and play some golf, it may not have been my you know, best thing if he was, in my head sort of thing, right? So sometimes we can be our own worst enemy. So that's the idea behind this mechanical robotic trading. But how do you get there? How do you, get there? And all we can do, and what we do during the Q school, is try to lay out the steps to help someone through to that process. And then they will, and they do, take themselves there. The retort that we hear a lot is, why was it so hard? you know, I wouldn't say a lot. I mean, because there's some that take to it like a duck to water, but why was it so hard? Why was it, I understand where that is born from, right? I do. We have a member, his name is Logan. He may even be listening now. And Logan, if you are, I say hello. Logan started with us years ago, and did like crazy good, crazy good. And he applied what he used to trade actively the cryptos, right? And one of the last times I talked to Logan, he said, Don, he goes, do you remember when I joined, how nervous and how anxious I was over, like, a $200 or $300 loss, a $500 or $600 drawdown? I said, yeah, I do. He goes, Don, he goes, in the last year, he goes, I have had several trades that have been over $100,000. And he goes, and I don't even bat an eyelash. Like, that's a beautiful thing, isn't it, Logan? A beautiful thing. He came to us on one Sunday afternoon. He called me and he said, "Hey, Don." He was from, or is from Utah, and said, "I've never traded a thing. I've never traded anything." And he said, "I've been watching and listening." And he goes, "I want to know what you know. I want to do what you're doing." And this was early on. This was early in Stock Market Caddy. And I didn't think we were going to have folks that had never traded anything. I just didn't think so. I thought it would be, it would swamp them, wouldn't make sense. So I didn't expect that. I thought it would always be, I always thought Stock Market Caddy was going to be for the person that, had, been trading for a little, maybe a few years or more. But he took to like a duck to water. Um, so it's noon here. We'll try to go a little bit longer here. I'd like to finish on a good note with y'all, but we'll try to go. We'll see what we can do. If I do any scalping, I will come on and let you know. All right, if I intervene, you'll see what'll happen is, because the machine is I don't have any. I could have some profit targets and stop losses and so forth built into this. I don't. Right, we could have the machine doing the scalping. Right, I chose not to do that. I thought we could have some nice big swings. We just caught this little chop here. Um, there's a number of things that we can do, with custom Rinko. But so if I do intervene, what will happen is we won't be in any position. I'll be out. We'll try to knock that down. But I'm going to try to sit tight here for a little bit. Now we can also use Swing Machine, by the way, for hedging various time frames against each other, various markets. And then we also get a very unique view on market relationships. It's really, really neat. We don't want to interrupt this view, but you know, gold is running, right? Now, that's not a surprise to our members. We've been telling our members for the last few days. And the reason being is that the um, the dollar, the dollar on a daily basis was in euphoria, absolutely screaming higher. And okay, so we're going to take another little hit there. Okay, so now we're down a point. So we're going to see if we can see if we get a little breakout here. I'm trying to knock this thing down. When we're trading intraday too, I am aware and mindful of how much time I have in the day. So I have plenty of time, right? It's noon, so I got plenty of time. But if this was 3 in the afternoon or 2 in the afternoon, I'm running out of time. I'd prefer to be well done by 3. Um, so what I might do at that time is then I might start doing some scalping just to, try to get myself back to par, right? And I always use these golf terms because I think of it like a game. It is a game to me. I just think of it like a game. It's like playing golf. It's like fly fishing. It's a game. Um, but we were saying is that if the dollar could just come in a little bit, right? And we don't think that the Fed, by the way, all this attention that again goes in there, the Fed's going to pivot. The Fed's going to pivot. No, they're not going to pivot. They're not. But there are going to be pauses, right? They're going to be pauses, and they've really brought the dollar up by increasing the interest rates. The dollar has really, really ratcheted up in value, and it has simply paused. It's just a tech. I don't even think the Fed's done much of anything. Maybe the hedgies, it's just a little technical pause. So the dollars come in, and in that gold has run. And so we had the dollar in euphoria and we had gold in panic. What do we want to do? Fade the dollar, could have done that, and get long gold and silver. Huge trade, huge trade. Very, very easy to see and not even think about it. Nothing to think about. I guess where I was going to go too, though, I started to tell the story about, now I forgot, Natalie Brunell in the crypto crowd. So this time last year, Bitcoin's trading at $80,000 a coin, and they're all saying, cash is trash. Well, the dollar on Swing Machine on a daily basis went along last year on October 10th. What's today? So about October 10th. And if you had bought a dollar contract on October 10th of this time last year, when the dollar, a futures contract was selling at 93 cents, it would have cost you $1,800. You would have needed $1,800 in your account. And just the other day, that $1,800 would have been worth how much? $20,000. Are you shitting me, bagger? No, I'm not. So much for cash was trash, right? You got a tenfold increase in the dollar, in a leveraged dollar position. Just the opposite of what all those birds down there in Miami were talking about. They were down there, smoking and joking and, impressing each other, and, you know, and people put tens and hundreds of thousands of dollars into Bitcoin, thinking it was going to go to $500,000 a coin. And what did it do? You know, It's down 82, 83%. How about AMC? Remember the apes? Remember those guys? Um, okay, so we're getting a little whipsaw here. So we may have to start doing a little bit of scalping. And so bear with me. I'll let you know. I'd rather not, but we're not going to let this get out of hand. Try to work our way back. Open up something here. Just get myself set up. I lost my train of thought. What was I talking about? Ted does that. My golden. He goes out on the front lawn. He kind of gives me that look like, what? I came out here to do something. What the hell? What in the hell? Oh, yeah. But they were saying that, the cash was trash and, that it was anything but. People, lost a lot of money. Oh, AMC. Yeah, AMC. The apes. We made a video on that last September too, the end of September, and it was trading at about $45 a share. And we said, yeah, it could break out. And if it does break out, yeah, maybe we'll buy it. But if it breaks down, not going to be good. But we didn't. And in the video, it's still there, September of last year. I remember making it. And I said, but I'm not buying it here. Breakout, yes. Breakdown, no. And we said it's more than likely going to break down. AMC is now trading, I think, or was about $8 a share. That's awful. It's a disaster. Remember GameStunk? The thing went from 5 to 500. People bought it up there. I think it's trading at like at $20, $25. It's going to zero. Now, it's also good that you see this because if you have an unreal expectation of your own trading, you're going to be disappointed. If you have an unreal expectation of someone else's, be disappointed. And if you have an unreal, we're mechanical, we're robotic, but we will have drawdowns. It's not possible not to do that. And if you have an expectation and you're looking for some one program, something, someone guru, whereby you're going to merely just put your money in and have no trading skill and anything, and it's going to automatically, print you money, and you're not going to have any drawdowns or any, it's just going to be perfect trade after perfect trade, and you're going to be disappointed because it doesn't exist. I hate to be the bearer of bad news. It does not exist. Now, the risk that I take here isn't the risk of taking the scalp, to work way back, is that I risk intervening, and then missing the really decent move that cleans up not only my draw, but also makes quite a bit of money. This particular strategy can do really well if we break, so I'm trying to keep my powder dry here. I don't like it, but we'll see how I do. Swing machine is giving me some comfort. The 1 minute is short right in here. What type of trade is that? It's a counter trade. That 5 minute long here at 11,510 is really guarding this market. So this is a little counter move. It just isn't giving us much of anything right here, right now. And as we watch this together, and it's basically just doing nothing right now, just middle of the day right here, just kind of chopping and flopping, is another really big consideration. If you've never given this some thought, I've asked people, we get these phone calls, of course, and I ask folks, how do you keep score? And they just kind of, kind of puzzle, like, what do you mean? What do you mean, no? I'm like, how do you keep score? Oh, I keep score of the money, you know? Oh, well, you're down $1,232. That ain't so good. um, or wow, yeah, I saw he was up 1,200 or whatever it is, right? If you are keeping score by the money, once again, you're hamstrung. How do you want to keep score by the metrics of your trading? The money is a byproduct. And a lot of it, the money can hinge upon how much, what strategy, or not what strategy, what market, and what leverage, right? We're trading a mini contract here. If you were trading a micro, yeah, it would be down $123.20. And maybe, it's actually a blessing. You can trade these things, these micros. We didn't have them years ago. You had to start with minis. So it can be a great place to start so that you get your trading legs need to experience this. Um, but we keep score something called a profit factor, gross profit divided by gross loss on a daily basis, certainly on a weekly basis. And we're looking to have a profit factor ideally over 3, which means um, if it's at 1, you're basically flipping coins. If you're under 1, you're losing money. If you're 1 to 2, you're working hard and you're putting shingles on a roof, though it's really, really hard. If you're 2 to 3, you're above average. If you're over 3, it's like nirvana. And sometimes there are days and there are weeks and it fluctuates. And you have to understand that. We remind everybody it will fluctuate. And, we've had some members have some, incredible weeks, back to back times, very, very high. Just say, enjoy it. It's easy, but don't get, don't get full of yourself. Don't get euphoric. Understand what you're doing. And so we had one member in particular, and we have members that are here now. He is not here right now. He may be on YouTube, but he had a profit factor. I remember his name is David from Germany. He had a profit factor for a week of 80. 80. Anthony made $80 for every dollar he lost. He was a very happy boy. It's like, holy smokes, Don. So you can do the math from there. I don't know the money. I don't need to know the money, but I know the metric. So if he lost $100 for the week, he made $8,000. If he lost 1,000, he made 80. You can do the math from there, but I don't even want to know. He may have been trading, a size different from me. I don't want to feel bad. So our process is much the same. It doesn't really matter. It's scalable. You just got to need to grow and be patient and hone your craft, hone your game. I'm still not going to do any scalping. I'm pretty stubborn. So I'm going to just, try to sit on my hands here. Swing machine is still countering this little 1 minute. 13 minutes ago, as you can see it coming in on swing machine. That 5-minute long is still there. It's just like a sentinel. It's like a guard, that 920, they put a stake in the ground. And that price is 11,510. Yeah. Well, I don't want to, but I will go ahead and grab a little. I've got to reset my strategy so it's ready to go again. So I scalped that little one, didn't get that much out of it. So I'm going to try here to knock down my drawdown. I'm going to try to knock it down so that I can be a little more comfortable and hopefully a little more patient. I don't want to be down this much. See, the pressure would, if it was 2, 3 o'clock in the afternoon or 3 o'clock, boy, I don't want to be in the last hour down that much. So we'll see if we can knock it down. And with swing machine being long on the 5-minute, I have to show that some deference. The likelihood is that it's going to resume back up. The likelihood is the 5-minute is going to resume. This 1 minute will probably, very well could go long again. Now we're not trading swing, but I'm using it as a tool. Now you may or may not like this particular chart. I do. I have another program that I really like. We'll probably run that one tomorrow, but I chose a different one. But the custom Renko I like. But we also have other charts, point and figure. We can use price charts and line break, classic Renko, range bar charts. What we always suggest to everybody is when they come through the Q school, we try to get an understanding of what it is they like, what it is they like to do, and then kind of work around it from there. We don't want to completely overhaul what they like. We can help in it, we think, in a big way, and then settle in. I still move around quite a bit, do a little different things. especially we're, exposing a lot of different things to new people during the Q school. But once you settle in, and we say to our members, settle in and and then and then just stay on it. you know. And if you can stay on the same thing for weeks or months at a time, yeah, great, stay on it. Just keep doing it. We like to lay everything out like a buffet table because in the beginning, so that you know what's possible, not to overwhelm. You have to caution. We do caution. We have to guard against that. We're not, but we think it's better for one's confidence to know before you get started of all these different ways of going about it, so that when whatever it is you're running is doing well and you're doing well, and you get the stock market beat at that night in Caddyshack. Remember that scene? And then suddenly it isn't going so well. Things get a little tight in the seat. You want to be able to know yourself, like, okay, yeah, I remember during the Q school, maybe this particular market, maybe it'd be better I move to a point and figure, or maybe it might be better I run something like this. And you already know. So as opposed to, we're there, but as opposed to us, oh, well, you could do this and you could do that, and be like, well, why didn't you tell me that in the beginning, right? So we think it helps with the confidence to know what's available, like in this buffet table, and you kind of pick and choose what you want to use when you want to use it. That's why our membership is set up the way that it is, that you get everything. Not one thing, not two things, not three. You get everything. We have folks that that change the interval on Swing Machine, that maybe just pick one interval or just two intervals, and they change it, and they may change it from market to market, and that's okay. It's these little dots, by the way, these are C points, C point long. We can actually be trading. We can get the machine to trade these too. Yeah, it's a little bit of money there, a little bit of money there. We'll see. It looks like it wants to hold here. We'll see. I'm not doing this manually. The machine will pick this up if we get along. These counter trend trades against the 5, they're more frequent. They're more frequent. I used to have an analogy. I'm going to have to think of another one. I used to compare them to butterfly farts in the Sahara Desert and hurricanes. I think I'm going to skip on that today. No, thanks. I think we'll pass on the hurricane analogy for right now. But they're more frequent. The hurricanes are less, thank God, hopefully less frequent. Trading and how we came to do Stock Market Caddy, it can be a lonely endeavor, right? But that is a big part. I like people. I like learning, and so we have members with all kinds of different backgrounds, and we may not be in touch every single day or even every single week, but they know where we are, and they can reach us, and I in turn can reach them, and their success does not hurt me. I'm not managing anybody's money. I'm not making specific recommendations to buy or sell anything. And embedded in that is your success is your success. You can do better. Nothing, it doesn't hurt me. It's great. And the other part of it is too, you want to think about, we cannot control the market. We can't. Isn't it the craziest damn thing to think that, where we finished on Friday and now this thing runs up? I mean, you could drive yourself to drink thinking, well, why the hell is the NASDAQ up 650 points from Friday? What the hell happened there? Well, it's got to be this, it's got to be that. And, the internet is full of all those guys, right? And I like listening to Peter Schiff and some of them, but it's not tradable. None of that is tradable. I mean, he's been touting gold for 15 years. Um, I, you know, it, we need to get in. We need to get in, and maybe the market's going to go to 15,000 again. I don't know. It doesn't, but the way that we trade it really doesn't matter. We just got to get in and get our share. But so it's going to do what it's going to do. But you can't. There are things that you can control, and you need to know what those things are. What are they? Well, you choose the market you want to trade. Want to trade the NASDAQ every day? Okay. It's the crazy aunt in the basement, you know, but it's okay. I like trading it. Um, but you get to choose the market you want to trade. You get to choose the leverage you want to use. Maybe you don't want to use any leverage. Right? Trade ETFs. Um, you get to decide when you want to trade. Now, if you're in the public markets trading stock, you got from 9:30 to 4. You trade futures, you got all night, and you can start at 4 a.m., which is a great time to trade. All right, there's the long. Right, I didn't do that. The machine did that. And let's see. Now we're in sync with swing machines. So I'm not gonna be that eager to scalp this. I'm gonna just sit tight. Let's see if we can get this thing to run. So we're thinking now. So you can start early, and then also you get to decide when you want to quit. How big of an advantage is that? That's a huge advantage. Huge, huge. You play golf with your golfing buddy or any other game, and you get to decide when the game is over. I play Scrabble with Susan. There's a threshold we got to hit. If I could just quit, she'd never play. So it's a huge advantage, but you got to set yourself up for that. And what we try to do is help people set themselves up for success. Do you just come flying into the market, when you have some free time? Just come flying in. I get off work early. It's 2:00 and, or it's, what time is it? 12:30. I got a couple of hours before a conference call. All right. Hey, all right. It looks like it's going down. I'm going to throw it on. Oh, made some money. Oh, no, I didn't. Oh, all right. Oh, that's no good. Even if it is good for 4 or 5 days or 4 or 5 trading sessions, what are you doing? Are you honing a craft? Or are you just flinging stuff around? So I try to get as disciplined like any other sporting event. So we do have this little C point right here. So we're looking, so it does, and this looks good to me. If we can break out again, we could get a nice run, right? If we can clear all this chop, see, we're going sideways here for a couple of hours. Once you're in chop, though, that's the other thing about chop. Once you're in it, it's probably going to continue for a period of time, and then it'll break and clear. So, and I could begin to mark this up, but I don't want to do that. So let's just say the bottom of this chop is 11,615, 615, and let's say the top of the chop is, we'll say 670. So that's how many points? That's about 60 points, 55, 60 points. If we could clear 11,672, we could actually run to 11,720. We actually could. We could get up in here. And so I just need to leave this alone. Now, if I'm emotionally driven and I'm like, oh man, I'm down, I'm going to get hurt, or I'm going to embarrass myself here, I better get that money in so I'm not so embarrassed. No. If I do that, then I may not be in that run. So I got to just relax. And the other thing is, I just share this with you. I'm chatting with you all now. I don't think about what we're doing, right? Like Susan and I, we discuss strategies and things like that, but we don't really discuss the market. Like Susan will do her trading and I'll do mine, and then we'll connect and have lunch, and we don't discuss the market. It's like, did you have a good morning? Yeah, great. Maybe that's the extent of it. Um, so you want to, I listen to music. I like to read, um, and have a little treadmill here. Like to take Ted for some walks, um, get some fresh air. Want to enjoy it. It should be enjoyable. I hope it is for you. We'll take some notes. Like I'm already thinking like, maybe, and I haven't been using the custom Rinko of late. And I'm thinking, maybe, I could have run a little different program. So I'll do it tomorrow. I think I would have done a little better. Now that's going to be hard for you as a new member to know, but we do have a library of all the programs, and then we can always, um, if a person comes to us and says, "Hey, I was running such and such, and I'm not doing so good, or I am doing," we can have a conversation about, okay, well, have you tried this? Have you tried that? There's a lot of different things one can do. There's things that you can do with futures that you can't do with stocks. You can run competing programs, right? You can have a program on the Nasdaq running in one direction and have another one running in the other direction. Why would you do that? Well, maybe one strategy is running real fast, the other one's running real slow, the other one's running real fast. Oh, why would I do that, Don? Well, you would hedge. Why would I hedge? I just want to put on a trade and I want it to go up. Well, we're talking about account volatility, right? If we can do some hedging, if we can reduce the account volatility, then, I can still get to where I need to go without putting so much pressure on myself for every single trade. It's got to be a winning trade because I know I'm going to have losing trades. I just don't want to have big losing trades. So we can run hedging programs. You can't really do that well with stocks. You can do it great with options, right? Can do it there too. We'll try to demonstrate that one day. We will do this, for instance, here. You could have the NASDAQ going long on a 5 minute. So you'd still be long. And then every time the 1 minute goes short, we take the short. But what we would do is we'd be long one mini here and maybe short the 1 minute with 5 micros. So you may not be up the full amount. You may have had some losses, but the account volatility, the idea is the account volatility would be reduced is the idea. Got to track it. Got to experiment with it and track it, write it down, spreadsheets. And you can see even on an inch time frame, look how tight this is, right? On a 1 minute, 3 minute, 5 minute, look at, we're just right in here. Look how tight this is. It's crazy. We've moved 600 points. Now the thing can't move 5 or 10 points. Somebody's going to get slammed, right? This thing's going to probably rip, rip out of here. We're either going to be up here or down here. I just got to kind of stay out of the way because the strategy should, operative word should, pick up on it. But look how tight, we're at 639, 641, less than 5 points. How else can this happen? If I had the other markets too, the other day they all moved, at 5:30 in the morning, within 5 or 10 minutes of each other. How does that happen if it's not by machine? And then if you say like, okay, it's by machine, then then what is everything else about? What's all this crap you see online, or wherever else? Making stuff up. And it's because in Wall Street knows what Madison Avenue knows, and Madison Avenue and Wall Street are virtually one and the same group of people, same thing. And they know how we operate our minds. We remember when you were a kid and you'd go to the library, they had these buildings where they house books. I don't think anybody goes there anymore. At least the kids don't. And they had these little card catalogs, and you'd have to look up a subject or an author, and you had the Dewey Decimal System, and you'd have to get the number, write it down on a card, go to the stacks, find the book. And our minds are like those card catalogs. We remember stuff based on stories, on narratives. If somebody tells you an obscure fact today and you're asked about that obscure fact a couple of weeks from now, you won't remember. If somebody tells you a story around that obscure fact, you're more likely to remember it because you'll remember the story. So Wall Street has learned from Madison Avenue, and the two of them are one and the same. It's like, tell the sheeple a story. Make the shit up. Make it up. Tell them, and that's what they do. Okay, so I'm going to let you watch here a little bit. I'm going to let it just do its thing. I've got to attend to some options here in the middle part of the day. So we'll let this run its course here. I'm going to just step aside for a little bit. I'll let you watch. Okay. I tell you, I do hear what you hear sometimes. Like we do trade options a little bit, right? But they're more on position basis, so they're not that frequent. And but these people that say they trade hundreds of options a day, I don't get that at all. Um, you got to deal with liquidity issues with these things, and you know, I just you can't trade them robotically, mechanically like that. They're too illiquid. You get ripped off these options. So I mean, we do trade them, right? But on a position basis, like when I want to go overnight or go further out, we will sometimes use options. Now I got a decision to make here. Nice little pull down. Um, the decision is this. It's 1250, right? It's 1250, and I'm suffering a draw. And my threshold, the pain is about a point. So I'm going to I'm going to do something I'd rather not do. And that is, I've got to make sure that I get this trade in the boat. I got to try to knock um, this down a little. And I equate it to like golf, like um, sometimes you want to, get on a par five in two in my dreams, right? But sometimes depends on the golf course, right? And but if I'm behind, I may not. I may have to lay up, and just get a par, get back on track. So I had to intervene there. And when I intervene, the strategy, you can see the strategy still thinks it's short, and I'm not short. And the bugger of this is this might be the big one that really crashes out. It might be, and I won't be in it. But I got to be mindful of my account. So if I can try to, maybe I get a little bounce and I can scalp another little one and get myself a little more comfortable in my account so I can be in position for whatever comes maybe this afternoon is the idea. So it didn't do real well. I've got to also turn off out of view. I've got to turn the strategy off and then turn it back on again so that it is in sync, that I don't miss the next order, right? So, and I'm going to try to sit on my hands here a little bit. And I don't know what the next big move will be. I mean, it might, um, when I look at Swing Machine, this little 12-minute move, that was the $500. Not the same strategy here, but had a nice pullback. But the 5-minute is still long from 9:20 this morning, and that's still there. So these trades right now are what type of trades? They're counter trades to the 5-minute long. You can make money off of them, but you do kind of want to be aggressive with them. Now, what will happen is every once in a while, not often, not all the time, they are often, but not all the time, these will do so well that it'll roll over and crash the 5-minute, and then we crash out. The issue for me, and I just have to let it go. I mean, I think there's some pretty good volatility here, so I still think we'll get plenty of chance to get some trades in and clear this up a little. Is the idea, right? So I'm a little more handsy than I would have been because of the time. It's 12:52. It's in the afternoon, and so I'm thinking, well, at minimum, maybe we're positive, but I would like to have this, knocked down a little. Make sense? I describe it because I don't hear it expressed very often. I don't hear it expressed at all. I never do on anything online. I hear some palooka drawing trend lines, moving averages. I don't think about it like this though, right? So I'm kind of describing it where, the emotions of it or we're going through, but I'm so far beyond it now. I've done it just so many times. I do not think about it. And I don't describe this every day to our members because they would be like out of their minds. They wouldn't want to, they don't want to hear this. I mean, in the beginning, maybe, they want to hear, but they want to do their own thing. They don't want me in their head. And I don't want to be in anyone's head, right? We just kind of lay it all out, do their own thing. We'll hear from one member and he's running such and such a program on such and such a chart with Swing Machine. Another person will be doing such and such and such and such. Another person will be mixing. Yeah, beautiful, beautiful. As long as you're getting it done. One person's, got a daily goal, another person's got a weekly goal, another person, um, but they're all more or less, coming at this, um, the same, going after a profit factor. And, no one day is going to, retire them. Therefore, no one day is going to knock them out. Not going to happen. Once you come to grips with that, then you got to come to grips with, that means I got to trade, right? You got to trade, so. Now, maybe you're running this program day after day after day. And you're like, something, Don? Between 11:30 and 1:15, it's crappy. And don't run that. You can actually set the timer and turn it off. It runs really well, like between 4 and 10 and 1 and 4, or, okay, then run it. We come on to do this, to kind of show. There definitely is a market though between 3 a.m. and 8 a.m. There's like a whole market there. It's a really, really nice time to trade futures. And then there's the opening, mid morning. Then we go dormy, and then we get an afternoon. I took some, seeing what we're seeing, I took some call options. We had some nice call options that we had purchased the other day. I took those off, closed them out. Futures, you don't have to deal with time decay, right? Options, you got to deal with damn time decay. You got to deal with volatility, implied volatility. You got to deal with time decay, theta. So a little more complicated there. All right, so I'm going to need to go get a lunch, but I'm going to let it run. I got to let it run. Um, Tina, let me know how much you get in the bank. um, because you're free to do what you want. You're on delay. I wouldn't want you to be trying to shadow these trades, but maybe a little bit, but you really not a good idea. It's not why we're doing it. But so when I come back, I'll let you all know, but we'll make sure that the electricity stays on. So I'm back. So, a little maddening, right? I'm human, right? So this is